And we're just talking with regards to what we've been seeing from the World Bank, and it seems that sub-Saharan Africa is starting to make a lot of progress in reaching its Millennium Development Goals. We are going at a very fast pace, not fast enough, we're not really catching up, but a different story, a story of growth that is coming through from Africa.
It's definitely a tremendous story. And so what we've done this last week was the Reuters Africa Investment Summit. It's the second one that we've had. We're planning on doing them every year, and we bring in about 20 top newsmakers, be they CEOs, central bankers, heads of state. Although this year we didn't have a head of state, we had some senior politicians, however. And we do it in Lagos, we do it in Nairobi, and we do it in Johannesburg. We also did some interviews in Angola, some out of Uganda as well. So we're talking about the growth opportunities in Africa. We're talking about the challenges investors face. What do companies need to do to channel the huge potential that is in Africa? Okay,
so some of those challenges that we can think of is, of course, getting all the goods to various African countries. And we know this because a lot of retailers, South African retailers, operate in Africa. It's all about central distribution systems and infrastructure. But there are innovative ways in which companies are starting to overcome some of these issues, aren't there?
Right. I mean, the main challenge here is you've got this immense growth, and it's really exciting. You've got sub-Saharan Africa averaging something like 6% GDP growth. You've got fast-growing populations. So it should all be lined up for the perfect consumer story. But the problem, as you mentioned, is infrastructure. So one of the things that we found out during the summit is that the companies that are going to be successful in Africa are the ones that are going to have to be very clever and very creative in getting out into parts of sub-Saharan Africa. So for instance, SAB Miller, Africa's largest brewery, a company that really knows the continent well. They are totally self-sufficient in Africa. So they generate their own electricity, they treat their own water, they've got to do it all for themselves. So if you're going to be successful in Africa, it's a little bit more than just a little bit of local knowledge and having people on the ground. For some of these companies, you have to be a self-sufficient island.
Absolutely. I mean, and we also know that a lot of the companies are starting to make progress with, speaking to policymakers and then also embarking on infrastructure spend in that regard. We're starting to see a lot of big multinational companies making a lot of headway and actually dealing with a lot of the African economies and the governments. Is that also one of the things that perhaps have come to the fore? You've got private sector speaking to the public sector.
Yeah, that's definitely a big thing. And we anticipate, our speakers anticipated that we're going to see more of that. And I think probably one story that kind of brought that into the limelight over the last year was the sort of Walmart Massmart acquisition. You've got the world's biggest retailer. It's a huge vote on Africa right there.
Absolutely. So apart from merger and acquisition activity, which we could obviously see actually playing out extensively in Africa, private equity is also a very exciting space. We're seeing fresh money coming in and looking at angel investing and looking at those companies that perhaps other people and banks wouldn't touch.
Yeah, no, and I think one of the speakers said to us that they thought that 2012 may well be sort of a banner year for private equity in Africa. Now, it's a pretty compelling story because if you look at some of these smaller markets, the capital markets are really illiquid. So if you want to get that growth, it's going to be very hard to do that in a stock market. So private equity seems like the most logical way to do that. And they have a longer time frame for investments. And probably the biggest endorsement of private equity that came out of the summit came out of South Africa, our own PIC. The head of the PIC told us as part of the summit interview that they'd be looking to spend up to something like $3.5 or $3.8 billion in private equity in Africa.
And I mean, it's exciting because we also know that the allocation to pension funds in South Africa increasingly allowed now to invest further into private equity, and we started to see this coming through. You mentioned something interesting. We've got high yields coming through on private equity, so high returns, but the risk is also very high. Is there any kind of hope that things could change where the risk could be mitigated to the downside as opposed to having far more risk within this space?
That's a very good question. I think the timing mean now where we are in sort of the global cycle means that investors are going to be taking a much more measured approach. If this were 2008 and things had continued without the financial crisis, I think Africa would be sitting looking at a wave of hot speculative money rushing in. But that's not going to happen anymore. I think investors are going to take a much more measured approach. And the private equity bankers we spoke to, they talked about the great levels of detail and due diligence that they're doing in deals.
Fantastic. So let's look at some of the regions. Kenya, Uganda, Tanzania, Burundi, Rwanda being key focus areas. Obviously Nigeria, Ghana also being very exciting areas as well. What are the key countries that actually came to the fore where investors are most excited about?
Yeah, well, I think sort of Nigeria's, it's kind of like the China of Africa in the sense that, and that's not new. No, people say this all the time, but it's too big to ignore. You can't be in Africa without ignoring Nigeria. But the other compelling argument that certain speakers made was that the sort of East African community is a very attractive one too, and that interest in Nigeria should not overshadow a similar interest in East Africa, because that whole community, you're looking at a similar, an aggregate GDP that would be similar, an aggregate population that would be similar, and you're also looking at an area where it is, the individual economies are quite diversified. They're not reliant solely on oil. Okay,
so let's talk about who's actually interested. We're looking at China, South America. It's actually all the emerging markets that are interested in Africa.
Yeah, this sort of South-South story is kind of this is a really interesting one, and it also feeds back to the private equity, because private equity bankers, the hardest thing in private equity is the exit, right? So when you go into an investment, you have to be thinking about, how am I going to exit this investment? Now, if you're in the US, that's not really a problem. You can IPO it. Well, you can't
exactly IPO to the same extent as what you see there, because obviously liquidity issues.
The liquidity issues in local capital markets. So the IPO isn't as easy. So what a lot of these private equity bankers are looking to do is they're looking to buy, take a stake in a company and then make it a sort of regional champion. If it's Kenyan, then take it across East Africa. If it's Nigerian, do what you can to take it across West Africa. Make it a bit of a regional champion. And then they will hope that they'll get some sort of South-South exit opportunity, whether it be an Indian or a Brazilian or a Chinese buyer looking to get a foothold in Africa.
Sounds very exciting, David. Thank you so very much, sir, for joining us. Great to have you in studio.